here, and look who I have here today. It's Chris, founder and host of MMCrypto, one of the most popular trading YouTube channels for those who believe in crypto and who trade crypto. Hi, Chris. How are you?
Hey, Ola. Thanks for having me. We met on the blockchain cruise, isn't it?
Yes, we did.
Yes. Yeah, it's great to be on your show. Really cool to represent MMCrypto and to drop some content on your channel. Very glad to be here on the show.
I'm so happy to have you. So, Chris, let's start with why people actually follow you. What about the Bitcoin prices? We've seen lots of different, interesting things going on with Bitcoin price lately. And what is going on with the price? What will affect the price? What has affected the price lately? What moved the crypto market? And maybe does it relate to global market?
Yeah, well, so that's a great question, especially what drives the price in the future. That's always a question everyone is wondering about. And for Bitcoin, it's really hard to say. Like, it's really, really hard. It's so somehow unpredictable. What we can do is, and that's also a reason why many people are following us, is we can look at the history and then try to apply certain indicators in a model to predict the future Bitcoin price. But as always, it's very hard to predict it. Nevertheless, we always say, and I think someone else said it, we stole this quote from someone, that the history does not repeat itself, but it rhymes. So, for example, we are focusing on 3 different areas to check the Bitcoin price also for the future. And we are dividing in short-term, mid-term, and long-term. For the short-term, it's more the technical indicators, the TA point of view, influencing the Bitcoin price. For the midterm, it's the on-chain indicator. I will explain what that is. It's really, really interesting. And for the long term, it's the fundamental indicators, which is the usage of Bitcoin, for example, how many merchants adopted, the price per transaction, the mining cost, the difficulty, the hash rate, everything like that. That drives the price only in the long term. In the short term, the shorter the term is, the more greed, the more emotions are involved, of course. So very short term, it's the technical indicators, which everyone knows, Fibonacci retracements and so on. It's very difficult to go here without visuals and talk about that. What's very, very interesting is the midterm, the mid to long term, actually. That's the fundamental on-chain indicators. And for Bitcoin, that's the first asset class we ever had something like that. Think about stocks traded on a on an exchange, publicly listed companies, stocks of them trading on an exchange. You can only see the order books and stuff. And you can see the order books on exchanges also. But for Bitcoin, you can actually also check the blockchain. You can see the unspent transaction outputs, for example, how many Bitcoins are moved. And then you can check at which prices they are moved. For example, there is one indicator called the SOPR. It's the spend output profit ratio. We have just covered that today on our channel. We covered it already 2 or 3 times. And this one measures when the Bitcoins are moved, so thus indicating what price is being paid at this point of time, and then when they are moved again, for which price they are sold. And you have the metric of 1, which is like break even. But if it's below 1, you know that the average trader is trading on a loss. When it's above 1, the average trader is trading in a profit. So in a bear market, the value is most of the time it's below 1. Once we are in a bull market, which was the 1st of April, hopefully it's a bull market, the value is going above 1. And being below 1, for example, always when it is below 1 for a long time, you can consider that a bear market. So when we approach 1, you can say, okay, now everyone on average is break even, so we sell. That's a market. When we are going above 1, it switches to a buy the dip indicator, for example, in a bull market. So whenever we are above 1 for the SOPR, the spend output profit ratio, and we are approaching 1, then you can consider that as the temporary bottom, and it gave us a huge, tremendously accurate indicator for when to buy the dips. If you just look back, it's glassnode.studio.com. Just go Google the SOPR. You can see that each and every time in a bull market, when the value approached 1 or close to 1 or went below 1, only for one day, the average trader was trading in a loss. And that was the exact day we hit a temporary bottom and the price went up afterwards. No one is talking about it. It's like so mind-blowing how accurate that is and how you can really time the market accordingly due to only that indicator. And there are many more indicators like the Bitcoin network momentum, like so many different things. And that's a whole new world of technical analysis on the on-chain blockchain data. It's really, really mind-blowing. I want to incentivize everyone to check that out either on Twitter, Renato Shirakashi or so, or on our channel, MMCrypto. It's really cool. So just to close your question, what drives the price in the long term? That's the fundamental indicators. Of course, the more merchants accept Bitcoin as a payment solution, the more it gets adopted, the more people can pay with Bitcoin, you have more usage. So of course, that drives the price in the long term. Then you have the hash power. The more hash power it is, the more miners are involved, the more network effects you have, and the more security is also on the Bitcoin blockchain. The more miners are mining Bitcoin, the higher the hash rate is. Of course, the harder it is to make a 51% attack and so on. So the security is higher, and of course, also the underlying value on the Bitcoin blockchain or on any other blockchain is also higher. Then you have other different things like, for example, second layer solutions like Lightning. Once Lightning is adopted and finally working, like it takes ages, but once that is finally working, right now Bitcoin is a store of value. It is very expensive to make microtransaction in percentage terms, but once we have Lightning Network, it's adopted, people are using it. Of course, we are getting the second use case, the medium of exchange also, and that will like drive the Bitcoin price tremendously higher, but it can take 1, 2, 3, or 4 more years to do so. So I would consider that the very long term and the fundamentals. So I hope that was a good answer to your question.
Do you agree with Michael Novogratz, who said that Bitcoin will highly unlikely go below 5K?
From now on?
Yes.
Yeah, definitely. I agree to that. I would even take it a step further that with a pretty high degree of certainty, we won't even see prices below 8K again. But it's no financial advice. And a high degree of certainty can mean 90%, so there is still a 10% probability. But due to many, many reasons, the technical indicators and the on-chain fundamental indicators, all of them are pointing into the same direction. And of course, if everyone is looking at something, it is most probably not going to happen. But some people think we are going below because everyone thinks we don't go below. But what we can see right now, everyone was waiting for 8,500, for example, where a lot of indicators are pointing towards, but then it got front-run and we only hit 9,000. So that's another indicator. That's another phenomenon of Bitcoin, that when everyone is looking at something, either we overshoot it or we get front-run. And in this case, we got front-run so far. I don't think we get price below 8,000, but who knows? I mean, only a high degree of certainty. But to answer your question, yes, I agree with Mike Novogratz, yes.
Well, besides Bitcoin, there are like 2,400 other altcoins on the market. What do we do with volatility?
Yeah, I mean, maybe you're right. 2,400 on CoinMarketCap. Maybe it's 10,000 or so in total, but CoinMarketCap is just not listing them. And even the 2,400 on CoinMarketCap, I would say like 2,350 are not legit at all. But yeah, but let's talk about that later on. The volatility, I think the volatility, only focusing on Bitcoin, it will go down the higher the price goes in percentage terms, not in absolute terms. For the altcoins, I mean, we cannot do anything about it yet. I mean, once they die, the price is zero and there won't be any volatility. And if they win, the price will go higher and it will mature, the project will mature and the volatility will go down. So either way, the volatility will go down in the long term, either at zero, if it's a scam project or not legit, or at a very high market capitalization when it's matured.
So I pretty much got, what moves crypto prices and what moves crypto market? Does it relate with the global market? So for example, we have this correlation between Bitcoin and gold. We have this correlation between Bitcoin prices and the trade war. Is it really happening? Does it affect the prices?
Yeah, it's really interesting, that question, because that's in the end what Bitcoin is all about. Remember when Bitcoin was created, like in August or so, you had the white paper, or in October, I don't know, and then on the 3rd of January, the Genesis block in 2019. And guess what that was? I mean, 2008, 2009, that was just the time after the financial crisis. So Bitcoin is actually the answer to the flaws of the financial system. So what we were able to see within the last years, unfortunately, was a pretty a positive correlation between Bitcoin and stocks, and that was not what it was meant to be. But within the last weeks, it was very interesting. The stock market was going down and Bitcoin was going up. So that was finally what we wanted to see. But it was also the first time really that the stock market was really going down, because Bitcoin has never ever witnessed a financial crisis since 2007, 2008, because Bitcoin was not around over there. So right now, we think actually that maybe within the next 12 months, also with a very high degree of certainty, the financial crisis might be collapsing, because like we are so overshot. There is just so much money and debt into circulation that it cannot be served anytime soon. And the only thing they can do is lower the interest rates below 1. And this cannot hold for a long time. So once that happens, we are pretty confident that the Bitcoin price maybe will take a quick shock in the beginning, but in the mid and long run, it will actually have a negative correlation to the stock market, especially in a financial crisis. That's our opinion. Maybe we are biased, maybe we are subjective, but yeah, I think the correlation is turning, and it will turn further to the negative side, which is good.
What's your opinion on crypto exchanges recently adopting stable coins?
It's actually a good thing, because we always had US dollar Tether, which is, of course, centralized as all the other stable coins, except MakerDAO, which is great. But let's focus on the centralized ones. And for example, let's take US dollar Tether. We recently just made a video also where we were talking about US dollar Tether, and 80% of US dollar Tether, which is like a few billion US dollars, is held by 300 addresses. You have a you have a very low Gini coefficient, so you don't have a decentralization of ownership. It's a centralization of ownership. So a very few people, 300 addresses are maybe 150 people or so, are owning the majority of Tether. So, and Tether is only 75% backed by money. They admitted to that. So if it's 75% backed by money, and by real money, like if it's 75% backed and 80% are holding it, just imagine like when banks bail out, there are certain people who get paid first. And imagine who is getting paid first, probably the 300 addresses, or maybe most of them, right. The high network individuals, the exchanges and so on. And who will be left? The dear viewers probably watching that right now, the people who are not owning like a few million US dollar worth of Tether, and those will not get paid if Tether collapses. So it's a great thing that exchanges are adopting more stable coins, so you can actually diversify into different stable coins if you ever decide selling crypto for fiat or for a stable currency. It's very great, yes.
I know that most of your followers actually follow you to ask you one very important question. What about the Bitcoin prices? What about predictions? Can you make any predictions? Long term, short term?
Yeah, I mean, short term, it's very hard. Sometimes we try to do it, but there's always a probability function attached to it, and there's always a very high degree of uncertainty about the price in the short term. In the long run, if you're a trader, you take 55% chances, of course. But let's focus on the long term. So for the long term, our predictions at MMCrypto are that we, at least, if things go well, we can have black swan events. Everything can happen, but with a high probability. And if everything goes well, we can see Bitcoin prices of at least 400,000 US dollar per Bitcoin. And the reason for that is that we are looking at the stock to flow ratio, which is another fundamental on-chain indicator, but which is also being applied to gold and other commodities. So, for example, the stock to flow ratio of Bitcoin will be so high, way higher than gold. At the moment, it's higher than silver, lower than gold. And the gold market cap is at the moment 25 times higher than for Bitcoin. And also the stock to flow ratio is higher. But once Bitcoin's stock to flow ratio gets higher than this of gold, and it will get higher, 100% because that's mathematics. We know the inflation. Once that happens, then we will at least have a price target of 350, 400,000, which would, if you multiply the number of Bitcoin in the circulation and the price of 400,000, more or less equate to the gold market capitalization. Actually, we think that Bitcoin has more advantages of gold. We have a definite capped supply. For gold, we don't have it. We have gold on asteroids. We have it in oceans. Maybe some states are hiding it and we don't know about it. So Bitcoin has a lot of advantages over gold. So at least 400,000 because of the utility and the stock to flow ratio. We actually think that prices, especially when we have a currency crisis and the purchasing power of the US dollar decreases, prices of 5 million or 10 million per Bitcoin are a possibility. It sounds like a joke right now, but that's actually really what's possible, especially if the fiat currency system collapses.
What do you think about the recent moves on institutionalization of digital assets, like the futures trading platforms from Backed, from Ledger X? Will that move crypto prices up?
The futures, I mean, they are not really, it's contracts usually and not physically settled, so they cannot really affect the Bitcoin price. It's more the people really buying and selling in the order books of the physically settled Bitcoin. But actually, we are not against it. We are even an affiliate partner of one of these contract exchanges. So we don't think it's bad. If you want to trade with a very small portion of your portfolio, that's fine. We don't think it affects the Bitcoin price all too much, but these CME futures, for example, back in the days, they affected the Bitcoin price because futures usually should bring something which is overvalued down and something which is undervalued up. So what happened, the futures were released, of course, in December 2017, and the whole retail investors jumped in and made other people rich who shorted Bitcoin on CME. So somehow these kind of futures can affect the prices, but not on the contract exchanges. So yeah, I think they are legit, but they don't really affect the prices. Maybe besides of things like CME and Backed, of course, Backed will also affect the Bitcoin price because they have to actually own Bitcoin to let the institutions buy there.
Okay, thank you, Chris. Thank you for sharing your trading secrets.
Yeah, it's not a secret anymore.
Okay, make sure to follow MMCrypto and to follow NexChange interview series. Thank you, Chris. I'll see you soon.
Yeah, thank you so much. Thanks for having us.
Thanks. Cheers.
Bye.